If you're looking for stocks that provide a regular stream of income, then you might have thought about investing in dividend stocks. Dividend stocks are an appealing choice for investors who want a dependable income stream, lower risk than non-dividend paying stocks, and the opportunity for compounding returns. These stocks can help individuals looking to generate income, build wealth, or establish a stable investment portfolio. However, finding the best ones that are worth your money is not that easy. But lucky for you, we'll be talking about that in today's video. Hey, welcome to Stock Market Mate. Today we'll take a look at the top 8 dividend stocks of 2023. Before we get into that, do give this video a like and subscribe to the channel to help us beat the YouTube algorithm. If you're done with that, then let's get started. Investors who require regular income, particularly during retirement, may find monthly dividend stocks to be a valuable investment option. Additionally, some investors may opt for monthly dividend stocks during bear markets, when their stock prices are declining. No matter what your circumstances are, monthly dividends can simplify financial planning by providing dependable and regular payments, which can be particularly beneficial if you rely on your investment portfolio for income. Number 8. Realty Income. Realty Income is a dominant player in the realm of monthly dividend stocks and even brands itself as the monthly dividend company. The company has an impressive track record of consistency, having paid more than 600 consecutive monthly dividends since its IPO in 1994. Moreover, it has increased its dividend over 100 times, achieving a 4.5% compound annual growth rate. As a result, it qualifies as a dividend aristocrat, boasting more than 25 years of dividend increases. The company is poised to continue providing investors with a reliable monthly income stream as it acquired VEREIT, a fellow REIT, in 2021 and purchased nearly $6 billion worth of properties through smaller deals. This acquisition spree is projected to increase its cash flow per share by more than 9% in 2022. Realty Income has plenty of room for growth, as it estimates a $12 trillion global market opportunity for single-tenant net lease real estate, its target market. Despite last year's acquisitions, the company maintains a strong balance sheet, which positions it to continue expanding its portfolio in 2022 and support continued dividend growth. Number 7. Stag Industrial. Stag Industrial is another REIT that offers a monthly dividend and focuses on owning industrial real estate, such as warehouses and light industrial facilities. These properties have been in high demand due to the acceleration of e-commerce adoption and increased manufacturing in the US to combat supply chain issues during the pandemic. As a result, Stag has been able to maintain high occupancy levels and increase rental rates, resulting in steadily rising rental income. Over the years, Stag has increased its dividend, which has been largely driven by its ability to consistently expand its portfolio. Since its IPO a decade ago, the REIT has added more than 400 properties to its portfolio, resulting in more than 500 buildings. The company expects this steady expansion to continue, targeting $1 billion to $1.2 billion in property purchases each year. This, coupled with growing rental income from its existing properties, positions Stag to continue increasing its monthly dividend. Number 6. Gladstone Commercial Corporation. Gladstone Commercial is a real estate investment trust, or REIT, that has a diverse portfolio of properties. It primarily focuses on owning office and industrial properties that are net leased in the United States. Roughly 48% of its portfolio is made up of each of these types of properties. It also owns some retail and medical office buildings. The REIT's strategy is to concentrate on secondary markets that offer higher investment yields, which enables it to generate very stable income. This, in turn, has allowed Gladstone to pay a consistent dividend. In fact, the REIT has paid more than 200 consecutive monthly dividends that are at or above the previous month's level. While the REIT offers a high yield, its growth is modest. Gladstone Commercial has expanded its portfolio steadily over the years by acquiring additional office and industrial properties. As of the start of 2022, it had ample liquidity and solid financials to support its monthly payout and continue expanding its portfolio. Number 5. EPR Properties. EPR Properties is a specialized REIT that focuses on experiential real estate, including ski resorts, gaming facilities, eat and play venues, and movie theaters. It secures its properties through triple net leases with the operators, which means that tenants bear the responsibility for building insurance, maintenance, and real estate taxes. The COVID-19 pandemic had a significant impact on experiential real estate, causing many of these facilities to temporarily close or operate at reduced capacity. This affected their ability to pay rent, and EPR Properties had to suspend its monthly dividend in 2020. However, with the availability of vaccines, more people are gaining confidence and enjoying experiences outside the home. This has allowed EPR's tenants to catch up on the rent, enabling the REIT to resume its monthly dividend in July 2021. Although EPR Properties already offers an attractive yield, the company could increase its payout in the future as it expands its portfolio. With a strong balance sheet and plenty of liquidity, the company plans to acquire more experiential real estate. focusing on attraction-related properties that consumers can only experience outside the home. This strategy could improve the long-term durability of its dividend. Number 4. LTC Properties. LTC Properties is a healthcare-oriented REIT that focuses on investing in senior housing and skilled nursing properties that are secured by triple net leases, mortgage loans, and other cash-generating investment structures. This strategy generates a steady stream of income that supports the REIT's monthly dividend payments. The senior housing sector was severely impacted by the pandemic, and as a result, some of LTC's properties' tenants struggled to pay rent and even filed for bankruptcy. However, the REIT's strong financial position helped it weather the storm and offset some of the lost income through new investments. Thus, it was able to maintain its monthly dividend. As the pandemic recedes, market conditions are expected to improve, and LTC Properties' rental income is projected to increase in 2022. In addition to its recent investments, this should allow the REIT to continue offering a high-yielding monthly dividend that is sustainable over the long term. Number 3. SL Green. SL Green, the largest office landlord in New York City, has managed to fare well despite the pandemic-related challenges in the city's office sector. Primarily due to its focus on owning high-quality office properties, the office REIT has exceeded its leasing target for 2021 and anticipates signing more leases in 2022 as tenants look to lease quality spaces for their employees. The REIT's successful leasing is an indication that companies are planning to return to their offices in the future. Additionally, institutional investors such as pension funds continue to show interest in office buildings, which offer predictable income, making them a popular investment choice. SL Green has capitalized on this interest by selling select properties at attractive prices and using the cash to repay debt, fund new developments, make acquisitions, and repurchase stock. This approach has enabled SL Green to achieve 11 consecutive dividend increases, earning it the title of a dividend achiever. With improving market conditions and new developments, SL Green can continue to grow its dividend. Number 2. Pembina Pipeline. Pembina Pipeline is a company that specializes in energy infrastructure in Canada, processing plants, storage terminals, and export facilities, which are leased out to other energy companies under long-term, fixed-rate contracts. This approach generates stable cash flow for the company. Pembina has been consistently increasing its dividend payout, and this trend is likely to continue as it carries out more energy infrastructure expansion projects. The company has a backlog of secured projects, and several others are in the development pipeline, which could lead to future dividend growth. Besides supporting fossil fuel transportation, Pembina is also investing in low-carbon initiatives. It is collaborating with another Canadian energy infrastructure firm to develop a carbon dioxide transportation and sequestration system, and it is exploring opportunities in the hydrogen sector. These moves towards cleaner alternatives could help drive further dividend growth in the future. Number 1. Agree Realty. Agree Realty is a real estate investment trust, or REIT, that owns retail properties with triple net leases, which generate recurring rental income. These properties are mainly leased to essential retailers such as grocery, home improvement, dollar stores, and drug stores that are less susceptible to disruption from e-commerce or a recession. This enables Agree Realty to have a stable rental income to support its monthly dividend payments, making it a good monthly dividend stock. In January 2021, Agree Realty changed its dividend payment schedule from quarterly to monthly. It has a strong track record of increasing its dividend payments at a compound annual rate of 5.5% over the past decade. The company has been expanding its portfolio, acquiring a record $1.4 billion of properties in 2021, which has increased its rental income and capacity to pay dividends. With a strong balance sheet, Agree Realty plans to acquire another $1.1 billion to $1.3 billion of properties in 2022 to support further dividend growth. The company's expansion strategy is expected to continue to drive the upward trend in its dividend payments. Well, that's about everything. Thank you for watching our video on the top 8 best monthly dividend stocks to buy in 2023. We hope this information has been helpful in your investment decisions. Remember to do your own research and consult with a financial advisor before making any investment decisions. If you enjoyed this video, please like and subscribe to our channel for more informative content. Don't forget to hit the notification bell to stay up to date on our latest videos. Thank you again for watching, and we'll see you in the next one. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!